Once again, talk about the markets. Amit Jeswani is with us. Let's touch base with him and understand what is his reading of the current market scenario. Amit, hi, good afternoon. Thank you for taking time out to chat with us. Just want to understand, you're saying that you expect two bull markets emerge in the next 3 to 4 months. What are the kind of levers that you're betting on? And while we do approach the bull market over the next few months, right now, what will be some attractive investments or sectors or pockets that you're identifying?
Hi, good afternoon, and thank you for having me on your show. See, every bull market and bear market is exactly the same. So in the bull market, market chases earnings growth. Whereas in the bear market, market looks at promoter quality and balance sheet strength. So that's the difference between the bull market and the bear market. We actually divide every company into 4 parts. The type A type of companies are those 30-40% growth companies. Those are typically the leader of the bull market, and that is where the biggest money is made. There is type B companies. Type B companies are consistent 15-20% growing businesses which are very predictable. And this is the place where you want to be in a bear market. Then there is type C companies, which is basically they'll do good for 2 quarters and they do bad for 2 quarters. So those are companies we completely stay away from. And then there is the 4th type of companies, which is those cyclical businesses. These cyclical businesses fall 70-80% in a bear market, but in a bull market they go up 5-10x. So I don't think it's the time to be in the cyclical business side right now. We do believe that we are 3-4 months, like the maximum this bear market can stretch is the next 3-4 months, and by March we should have the next bull market starting. The idea is to catch the leader of the bull market. That's where big money, the 5-10-15x gains would be made. But for now, we are just sticking to the type B kind of companies of the consistent, predictable quality, high ROE. Those kind of companies are the ones that we are sticking to right now.
Right. Just also want to understand what are the kind of consumption stocks that you are bullish on, because your views state that you're selectively bullish. So which are the kind of themes within the consumption basket that you like?
So we are not bullish on auto at all. Auto and auto ancillary, that as a space will have, the feedback that we are getting from people is like the sales are down between 20-40%. Like Honda Motors about 30-35%, Maruti is about 20%. So this 1-2 quarters, we don't know this will sustain for, like, it's going to be down next 1-2 years or no. But for now, the numbers are going to be very weak for the next few quarters. So that's one space that we have zero position in. In consumers, the stocks which are doing okay would keep doing okay. That's where money is flowing in. That the quality stocks which are growing at 20-25% there, like Havells and all those kind of stocks, D-Mart, those stocks should do still a lot better from these levels. Reality is a problem. So companies who have exposure to, see, there is a very strong slowdown in real estate, like overall sector. Of course, the 10% organized pie would do better, but there are 200 industries which are connected to real estate, and that's a place which is a very big problem area for the economy, I believe.
Okay, which are the ones you prefer among the IT packs? Are there any select sort of IT companies that you prefer, blue chip, mid cap, or any particular companies?
So we are very interested in the product companies there. See, typically what we are looking out for, what is going to be the next. See, there's a core portfolio where you get reasonable returns with high conviction, and then there is a portfolio where you get high returns, but the conviction's a little reasonable. So on our high return segment, we are finding the next leader of the bull market. For the leader of the next bull market will be the first one to break out. They will start with mediocre, like not very expensive valuations, and the entire sector has to grow at 30% plus. So IT product for a case looks very good. The opportunity is large. Indian players have been able to get the business model right there. That's what we believe. So these are smaller companies right now. These are like between 5,000 to 15,000 kind of companies that we are looking out for. And these companies are already growing for the last 2 quarters at 40%, 30-40%. Those are the kind of companies that we would like to be. And those, like, we've not taken very large positions till now, but we are aggressively studying there. So that is one space which I would say can lead the next bull market.
Amit, we're almost a week away from the new year. What would be your strategy for 2019? How are you seeing the markets? What would be your outlook for the year?
See, I'll tell you. The leader of the global bull market were the FANG stocks. They were driving the markets higher for the last 5 years. Now those stocks have broken down. So normally when those stocks break down, it normally takes 5-6 months of downfall. So the 2019 will start on a patchy note for the US markets, and then somewhere there'll be so much panic, and on a bad news there'll be a bottom created probably around March. So that March is because so that is our own cycle studies that around March should be the bottom of the market for the US market and the global market, and from there you should start rallying. But the whole idea is that you need to catch the leaders of the next bull market, because that's where 10, 15, 20x will be created. And once that's what we are looking at. We've been more on cash this year. On one product we're on 50% cash. On the other product we're on 20% cash. So we've been on a lot of cash. So hopefully we'll be deploying that too.
Okay, Amit, on that note, we'll let you go. Thank you so much for sharing your perspective and your strategy for the new year and the kind of themes that you are betting upon.